Welcome to the week ahead for financial markets. Mike Smith, Senior Analyst and Head of Client Education and Trading for Go Markets, with you on this 6th of January to look at what the markets may have in store for this first week of 2025. On that note, of course, we want to take this opportunity again to wish you all the very best for 2025. I look forward to serving you throughout the next 12 months. Let's now look at 5 market moving factors for this week to keep an eye on. First of all, of course, we've got a potential technical tip over for major indices. We had a disappointing end to the Christmas period. Santa Claus rally didn't happen after those first 2 or 3 days. And traditionally, that Santa Claus rally has dictated to some degree what may happen in January. Now, of course, we've got Trump's inauguration and the new round of earnings coming out of the US mid-month. Let's have a look at the chart of the Nasdaq as an example, just to show you why this level is technically important where we are now. And although we saw some buying coming on Friday, you can see the weakness overall in the index. If we look at the futures contract, we are still, despite that move, around about 4% is upside. So we had a 5% pullback in total if we look at the lows of these candles. But this still looks like a double top. And so Friday's rally, profit taking for maybe some of the short traders, could be interesting as we go throughout the week. So we think this level here at 21,125 is pretty key. If we get a retest of this to the downside, we could see us drop through 21,000 and possibly even down to 2,500 ultimately. Secondly, of course, we have got the non-farm payroll number on Friday. Normally, of course, this is on the first week of the month. But of course, we had that disruption from New Year's Day last week that got in the way of several key points of data. Even a Goldilocks number, i.e. one that meets expectations, is unlikely to influence the Fed in the short term. We still think they're on track for a pause during January and may even through to March, prior to which obviously data will be kept an eye on, such as CPI, to see if a rate cut is possible sometime within this first quarter. We reported last week that Tesla were about to release a delivery report last week. We got that, and the market didn't respond favorably to it at all. If we look at a daily chart here, you can see we breached a key level here at 421 early in the week, and that delivery report, we can see the impact of that on Thursday, making its way intraday all the way down to 361. Really sharp bounce on Friday, though, suggesting that not only was there some short covering initially, but perhaps the buyers are back in, seeing this lower price as a potential opportunity. So that bounce right back up to over 410 is technically significant. We could be forming what's termed pipe formation here if we get another green candle, and that could push us back up towards 450 in the first instance, and maybe even to retest these highs that we hit less than a month ago. So one to watch in terms of Monday's action. Number 4, of course, we still see buying coming into the US dollar. We are at 15-month highs for the greenback on the back of 7-year highs in bond yields. This, of course, is due primarily to the belief that the Fed aren't going to cut rates more than a couple of times during 2025, which is a change to the downside from what was originally anticipated perhaps a couple of months ago. And finally, we want to look at copper. We had a pullback last week to a critical level, and some buying coming in on Friday, again, much as there was with many risk on assets. Let's just have a look at a copper chart. So you can see here on the daily chart that we tested this low that we hit on this candle on the 14th of November. So we tested that on Friday, Thursday, and Wednesday last week, but managed with these wicks to keep over that critical $4 level. Two things could happen here. We could get some selling again, which may retest $4, and if we do, we would expect a sell-off perhaps down to 390 as we were around about August. Of course, should we get some increased buying in at 414 is a level that we think is technically of interest. Should we see a move above there, we could see it retest 427 in the medium term. Be an interesting week for copper on the back of this short-term bounce of support. So those are your five major things for this week, just to keep an eye on. Of course, you can tune in to our daily live market updates and charts of the day at 12:30 p.m. Melbourne time every day, where we look across all the major asset classes and, of course, give you the headlines coming across the wires. This week's Inner Circle is going to be a strategy session. We're going to look at the parabolic SAR. The link should be in the email, or you can drop support a line to get the link for that if you're not already registered. That is on 8 p.m. this Wednesday coming. Remember, we're always going to be here for you, so look forward to hearing from you. If there's anything we can do to help, have a great week, and we'll see you soon. Trade safe and see you again soon. Bye bye for now.